But let's keep it going with US and especially what's happening on the politics front over there, because the White House is firing back at Democrats, accusing them of playing partisan games over claims of possible insider trading tied to Trump's tariff pause. Markets surged after Trump announced a 90-day delay on steeper tariffs, prompting calls from Democrats like Senator Adam Schiff for an urgent inquiry. Trump's cryptic posts before the news, "Be cool, great time to buy," are now under scrutiny. The White House insists the president was simply reassuring markets, not tipping off any traders. Also remember that the tariffs on China now total over 145%, including the fentanyl tax that's also coming in. But when asked for his reaction to Wall Street's market sell-off, Trump said he hadn't seen it during a cabinet meeting. Prompted to weigh in, Besant added that as negotiations develop, the US will end up in a place of great certainty. Let's go across and listen in.
Mr. President, can you give us a reaction to today's stock market drop and also give us a sense of the next steps with China?
Well, I haven't seen it because I've been here for 2.5 hours, so I'll be saying it. I think Scott went out. Scott, you want to have a statement on that?
Sure. Look, the up 2, down 1 is not a bad ratio, or up 10, down 5. And I think as we have talked about, as we go through the queue and settle with these countries who are going to bring us their best offers, we will end up in a place of great certainty over the next 90 days on tariffs. But we had very good inflation numbers today. Oil's down. We had a successful bond market. So I don't see anything unusual today.
Mr. Trade Representative, are you aware that the tariffs have been paused?
I am, yes.
When were you made aware of that?
Well, I understood the decision was made a few minutes ago.
Sitting here.
And under discussion.
Sitting here, under discussion. So did you know that this was under discussion, and why did you not include that as part of your opening remarks?
So typically what I don't do is divulge the contents of my discussions with
What are the
President
details of the pause?
Well, my understanding is that because so many countries have decided not to retaliate, we're going to have about 90 days.
No, excuse me? China increased their tariffs on the United States. Trump blinked.
What's the blink, sir?
What do you know about this pause? What are the details of it?
Well, the details, as I understand it, is that China continues to retaliate. Other countries didn't retaliate. The president 2 or 3 days ago said we wanted to negotiate with those countries that asked for meetings. That's what we're doing.
What are the details? How long is the pause? How many days? How many weeks?
I understand it's 90 days. I haven't spoken to the president since I've been
So
in
the
this
trade
hearing.
representative hasn't spoken to the president of the United States about a global reordering of trade.
All right, then moving on, after a fresh market sell-off, Trump's top trade advisor, Peter Navarro, is brushing off panic and cracking jokes. In fact, in an interview, Navarro dismissed claims that Trump's tariff U-turn spooked global markets, saying it's just a normal retracement, no big deal. Despite a historic market surge earlier, volatility remains in focus as well. But moving on, let's take a look at elevated bond yields levels as well. We caught up with Andrew Freris, who's the CEO at Ecognis Advisors, to decode the same. Let's go across and listen in to what he had to say.
China is the second biggest holder of both of government bonds and of treasury bills, following Japan. Should China decide to sell all or part of it, it could really deliver a colossal blow to the United States for 2 reasons. First, interest rates in the United States will go through the ceiling. Remember, bond yields on the 10-year went for by about 40 basis points within few hours, 40 basis points. Okay, since then, they have not fully recovered at all. The idea that the bond market has recovered is just not true. Okay, so should the Chinese decide to sell part or all their holdings, they will force on the United States an enormous increase, possibly double the yields, if not on long-term yields, and that will make it impossible for the Fed to cut interest rates, which is what Trump wants. The second thing, of course, it will devastate the US dollar, because the Chinese will sell, will receive US dollars, and then they will promptly dump them because they will want to switch the money into renminbi.
Okay, well, and trade talks are indeed picking up pace because US Trade Representative Scott Bessent met with Vietnam's Deputy Prime Minister Ho Duc Phoc to discuss unresolved economic issues. In a social media post, Bessent called for continued engagement and quick, demonstrable progress. The meeting signals Washington's intent to strengthen ties amid an intensifying trade war.
Rather than moving on, Trump is not ruling out an extension of his 90-day tariff pause. Speaking in a cabinet meeting, he in fact warned that if trade talks stall, higher reciprocal tariffs will snap back into place. It's got to be good for both parties. And that's the word coming in from the US president. But when pressed on whether he'd extend the pause, his response was, "We'll have to see what happens." So that really is what he's saying when it comes to this entire pause.
Well, the action continues because former Treasury Secretary Janet Yellen is the latest person slamming Trump's trade policies, calling them the worst self-inflicted wound I've ever seen. In her first interview since Trump returned to office, Yellen said the US has been hit by a huge protectionist shock and now faces the highest tariff rates since the 1930s. She added that she couldn't give the administration a passing grade if asked.
Rather than moving on, a new study shows that Trump's 25% auto tariffs could cost US automakers a jaw-dropping $108 billion this year. The Center for Automotive Research says that the Detroit, Ford, GM and Stellantis will take a $42 billion hit. Each imported car could carry nearly $9,000 in extra costs, while parts alone could add nearly $5,000 to US-built vehicles.
Well, we spoke about inflation earlier. Let's talk about it in greater detail now. US inflation has cooled off, dropping below 3% for the first time in 4 years. March CPI fell 0.1%, pulling the 12-month inflation rate down to just 2.4%. Gas prices have tumbled, eggs soared, and rent barely budged. Core inflation, which strips out food and energy, rose just 0.1%, its smallest gain in years. However, analysts warn that this is just the calm before the storm as tariffs kick in.
Rather than moving on, jobless claims in the US ticked up slightly but remain near historic lows. Initial claims rose by 4,000 to 223,000 in the first week of April, right in line with market expectations. More notably, in fact, you do have continuing claims that also fell by 43,000 to 1.85 million, signaling some improvement when it comes to re-employment. Meanwhile, claims by federal workers also dropped to their lowest under President Trump.
If you like this video, then like, share and subscribe to ET Now.